Okay, we are going on. We are still on time, which is good. We are happy with that. And Stefan, it's your turn now. My good old friend, Stefan Hallman from IAG. Big round of applause, please. Good to see you. So, IAG is the leading investment bank in Europe, in Germany, based in Germany, in Berlin. And they just launched IAG blockchain funds in San Francisco. And Stefan is the CEO of IAG. Wow.
That's what they say. That's what they say.
So again, thanks for coming. Some of you may know him from our previous Webrazi events, especially at Webrazi Summit, he was with us. And again now, he's here at Blockchain Ventures Summit. Again, thank you. Stage is yours.
Thank you very much. Good morning, everybody. Thank you very much for the kind introduction. I think the speakers before, I completely can sympathize with what they have been saying. So what I would like to do today a little bit, and I've been doing, I think, for the past year and a half, I'm on a missionary trip. So I'm not trying to sell you either services or invest in our business or do an ICO. What I'm trying to get my head around with you is getting the blockchain society or the community more institutional. Why? Because that's actually when the big money comes in, when regulation kicks in, when this becomes a mature market. Because at the moment it's a 90% retail market. So let me just check out how that works. Let me do a quick introduction to myself. So Ada was saying, we've been speaking here for quite often over the last years. My name is Stefan Hallman, I'm 49 years old, I'm first time married, I have 2 kids. My home and my loved home is Berlin, besides Istanbul. I'm in charge of anything which is blockchain, AI, e-health, and software at IAG. Basically, my relationship to Turkey is we opened up our first office in 2001 here in Turkey in difficult times, and we have never left the country again. So we've been a regulated banking unit over here. So therefore, I have a lot of passion for what Ada is doing with Webrazi, Bidrazi, blockchain, and so on. Let me see. 2 words to what we do. We're probably one of the leading European investment banks for technology and internet. Why? Because we do a hell of a lot of deals in these regions. We look at 10,000 companies per year. We are present with own operations, which we really own the equity in Asia, in the United States, and in Europe. So coming back to what I would like to talk you through for the next 20 minutes. It's one, a little bit demystifying blockchain and the ICOs, because I think there's a lot of different perception on what to do, how fast, whether it's arbitrage. Secondly, I give you the example of the US, because there have been some US speakers over here on where do we stand in regulation and what is my view on it. Please challenge me afterwards or even in between. And thirdly, I give you a couple of ideas how we have answered this and how we will reply to institutionalize and make this market more transparent. So what's the negative perception? Because you hear a lot of negative press sounding over the last year of the ICO market. One, there is no KYC, know your clients. Anti-money laundering is an issue. So that's why regulators come into place. That's why people talk about this. The identity of people investing is not really clear. It's not really a solution. We don't have any valuation models of valuing a utility token or an ICO. Whatever you hear today, none of them talk about how to value the company. I haven't seen one person talking about this. It's a risk, it's a problem, and it's a deficiency. And that will need to change. White papers, Charles was talking about this. I mean, give me a break. The name white paper, doesn't it show it all? It's a white paper of something which is not existing, of an idea, of a concept. We've all seen it before in 93, 95. So it's a bit of a problem. It becomes very technical or very superficial. promises which have been made, and Charles, I think you were saying that also. People promise the world and the sky in white papers. And trust me, this will bite you in the ass, particularly when private individuals lose their money and sue you collectively or individually. It will really get you, for the next 10 years, you will spend your life protecting yourself legally. And I'm not negative, I'm just telling you where the negative perception comes from. Lack of entrepreneurship with little execution experience. A lot of the ICOs are young teams, which is fine, but they have never proven or demonstrated their skill set to execute. They have great ideas, but an ICO is only successful if you have superior rocket internet-like, or whatever you want to call it, execution skills. ICOs are similar to penny stocks. Maybe what they are, of course, at the moment, they're probably 80 to 90% of all the money which you've seen in the bubbles before my previous speakers are retail investors, private individuals. That is not a very healthy situation. Questionable marketing activities. I get around 50 emails on LinkedIn every day when to be asked to invest into XYZ ICOs in such unprofessional, unbanking, unentrepreneurial ways. It's interesting. You see the stream still on Facebook and Google, how people advertise. Tenfold your money, become billionaire or ICO billionaire, stuff like this. I mean, just listen to this and think about this. Is this something you find very confident? Does that put a lot of confidence in you? I think regulation, the speculation about regulation is certainly giving the negative perception another push. And we have something which is probably comparable to the gold rush in 94, 95, when the IP protocol, the internet protocol came. So that's the negative, the risky part about this. Let me talk about the fundamental things which happen. And I have to say that probably the invention of blockchain as a technology, or let's say as a protocol, as a network, is probably the biggest revolution after the invention of the internet protocol in 93, 94, when Netscape browsed the internet and so on and so forth. Why? The internet protocol transferred information from one person to the other one, and that was pretty much it. And anything which came in the aftermath, payment, marketplaces, were artificially built around that protocol, but it was not foreseen to do so. Blockchain as a protocol actually is invented to transfer values over the internet, where both parties or counterparties can be identified and the transfer is secure. So that will revolutionize everything which we will do over the next 10 years. It will bring a new world, it will bring a new billionaires, new corporates, and it will be tough. And I give you a couple examples which may happen, and you can think about this. You bypassing middlemen and governments. You're going directly, one-on-one, peer-to-peer, which is fantastic, but it's very difficult for our mental state of mind to understand. We always work via third parties, a notary, a bank. We never transfer money directly. I got to tell you a little bit about anonymous and pseudonymous. Blockchain has not been made to be anonym in the internet to transfer money that don't know you. But it gives you a pseudonym. But once you reveal or KYC your pseudonym, it's the most transparent system. So keep that in mind, whatever you do. Everything, any data stream, which you will blockchain or which you send along the blockchain, and somebody or the world knows your pseudonym, it's public, it's known, they can follow. Just it's a malperception in the market. It's still an unregulated way to raise money. I think that will be over pretty soon, and it's something international. Blockchain, the ICOs, it's probably the true global market. We've seen it from the gentlemen's before. US-based, London limited, fundraising globally. So you need to have support and you need to be in the position to actually do this globally. Smart contracting, I think that's the key underlying. I told that about transferring value, plus the secure money transfer. So again, I'm very bullish. I'm very positive about blockchain. I think it will bring an absolutely new world order in internet and technology. But there's a lot of, Charles called it shitcoins, or I don't know how he called it somehow. We call it bullshit coins. There are hundreds of bullshit coins in the market. My favorite one being Berlin-based, and I have a Catholic wife and kids, and be a Protestant, is the Jesus coin. So you can buy a coin and a promise to forgive you sins and fight corruption. I mean, how cool is that, you know? And the probably even more surprising part about this is they have a market cap of $6.4 million US. So there are people who are actually buying Jesus coins. I mean, think of this. It's awesome. You don't need, the white paper is just one page. I forgive your sins. That's it. Awesome. I love it. No, but you see the point behind it. And I think ICO and blockchain as an underlying technology doesn't justify any business model. In simpler words, it needs to disrupt or alter centralized business model. That's actually the true function why we're all sitting, hopefully sitting here. Kodak coins, and I tell you a little bit about the sensitivities already in the market. You remember when Kodak issued their ICO, they jumped up 40%, and then a couple of months later in January, they had to announce, damn it, we're behind in our plan, in our milestone plan, in our white paper. Boom, almost 20% down. So the market is sensible to what you promise. Coming back to this, don't overpromise. Tell what you can do, where the risks are, but also where the opportunity are. But be fact-based. So, quick wrap-up, and then I probably go more into the regulatory part. What happened in 2017 and what is happening, or what will be happening in 2018? I think blockchain technology and smart contracting is a new asset class for early stage businesses, and they have all been pretty much based on ERC20 Ethereum technology or network. I have seen one Stellar, which I was very surprised because it was a proof of stake technology, very fast, I think more than 100,000 transactions per second, very simple in the way of smart contracting. I don't know whether that will be the future, but it needs to be seen. Utility tokens only, you probably have seen it. I will talk about this a little bit. White paper does the job. It's all you need, a little bit probably more on the tech side. Government and regulators are pretty much on the sideline, except in the US at the moment. KYC, AML checks, anti-money laundering, very limited or almost inexistent. Exchange platforms get hacked, and also they're not regulated. It's a big risk. I think probably 70–80% may be shut down in the future. And the most surprising part, but you have figured that out on your own, banks are shying away from that industry. Even for fundamental service like being a custodian, transfer agent of coins, they just don't even touch it. The first bank who actually has been moving out of that scaredness was Rabobank in the Netherlands, and I've heard another private bank in Switzerland. So this entire industry needs to be rebuilt in terms of service provision, value chain, at the moment completely on our own. It's sad, but it's true. So what's happening in 2018? 2018, new blockchain platforms, I think, will evolve, or technologies or networks. And there will be a question whether the proof of work, so the mining-focused, very energy-efficient networks, or the proof of stake ones will prevail. I have a clear view on this, but this is very philosophical. We can discuss this afterwards, but this decision on what is the right technology to ICO, what's the right technology for your business model in terms of network and underlying will evolve fundamentally in 2018. I think securitized tokens will come in 2018. It's a bumpy path because a lot of unanswered questions. Example, transfer agent. White paper will be replaced by PPM, private placement memorandum. That's where regulation will kick in. Regulators will forcefully and heavily step in different countries. KYC and AML will be mandatory. Security stacks will increase. I think exchanges, if you take the US as an example, will be ATS licensed, which will be mandatory. If not, they will be shut down in 2018 already. And the most interesting part is the institutional investors will come into the market. They will make it viable, that makes it large, that brings liquidity in the market, but also professionalism. Quick word on this. I know you may all know this, but it's important. Currency tokens like Ethereum, Bitcoin, whatsoever. I'm not a currency trader. I have no clue, and whether that's good or bad, and whether you should invest in this. So I cross this out of my equation. But I give you a simple answer to that. If Bitcoin will replace the gold standard, it's going to be a viable currency. If Ethereum solves their problem of electricity demand and consumption and will fork intelligently in the future, it will also prevail. So that's the only two projections I'm able to do. Anything else, I have to leave with you. On the utility token side, so it's a coupon. It's a couponing system. It's nothing really new. It's Kickstarters on steroids. At least that's what I explain it to my kids. This is a new asset class, and it's really important for the regulator to understand everywhere in the world. This needs to be regulated differently than securities or stock market trading whatsoever, because it's an early stage seed financing mechanism which didn't exist before. And it's important that we have it, and it's important that we do this professionally, because all the Jesus coins and lookalikes will screw up that market segment. But it's a super means of financing early stage ideas when you have the execution power. However, there is always a risk that this will be doomed as a security token and having the same regulation. Last but not least, security token. It's like a digital share. Nothing really to say, but on the regulatory side, it's probably a little more difficult. ICO evolution, just one slide of this, and I give you one number which I thought was really important. In 2017, ICOs outpaced venture capital investment 3.5 times. So you see the importance for the early stage seed market of ICOs. So you cannot talk this away. You cannot say it's bad stuff. But you have to professionalize this, because there's so much money and there's so much demand for this that we have to do this right. I think some of the speakers have said that before. Where is, excuse me, I couldn't put Switzerland in there because it was a Cointelegraph graph and I couldn't change it. So my view on this is very clear. I think Asia will be a huge player in that market with a focus on Singapore. Who will do sensible regulation. I think the US will, I don't know what they will do, but they will regulate. The Europeans will step behind. They will be the laggards, the lemmings, and you will see, we will see how that works, with the one exception is Switzerland. And Switzerland, I think, is a pretty awesome place for the moment to be in there. I'm not really fond of doing an opinion for Gibraltar and Malta, which I hear very often. The reason for that is it shies away institutional money. Institutional money does have an issue with those legislations, for the good and the bad. Interesting I always think it's a boring slide when I see it, but it basically shows, I mean, we're talking about utility coins. We're talking about the average size from 20 million to 40 million US dollars. Think of it, it's seed financing. That's a huge amount of money. I always wonder what those people are doing with the money. Seed, no product, 20 to 40 million. There's some dysfunctionability still in that market by overspending on things which I think have to be done in a different way. Should show that. Last but not least, I think I talked about this, the ICO market. At the moment, you see it's a pure Ethereum-denominated network market with ERC20. As I said, one stellar. It's kind of securitizing a right on the utility side. But what I want to finish with is tell you a little bit how the US is doing, and then I think I'm pretty much done because my time is running out. In the US, the ICOs have been considered as private placement and therefore have created an exemption, a regulation to exempt those ICOs or those crowd financing. At the moment, the SEC and FINRA is considering those tokens, no matter where they come from, as securities. It's still not be final, but they treat it in analogy. What does that mean? If somebody is advising you, like Charles or other ICO advisors, if they are not broker-dealer or regulated licensed broker-dealers in the US, you have an issue. You are not allowed to pay them and they're not allowed to receive money. They're not allowed to advise you according to the SEC. There is a potential risk in there. Secondly, if you put your coins on a non-regulated ATS, alternative trading system platform, you're screwed too, because they may immediately close down and take your coins off the market, and then you will be made liable for that. So those things you got to keep in mind. Thirdly, and that's about what are those regulations, and I'm not getting into vast details of regulatory talk, so I'm trying to keep it as sharp and rememberable for you in the moment. So what do we have? We have the exemption regulation A+. We call it the mini IPO. Basically, you can have non-accredited, unauthorized or private individuals and accredited investors. The good news about the accredited investors, they only have to file it for themselves. They don't have to, they basically display their wealth, and approximately 10% of certain thresholds, they're allowed to invest in those IPOs. You have no lockup in your coins. You can sell them immediately once they're listed. You can solicitate, meaning you can market your coins as you want to. So the only really caveat to that regulation or that exemption is you have to document your ICO as it would be an IPO. You may have heard of an S1 filing. It's a circular to your IPO, where you basically write a couple hundred pages on the risk, on your financial performance, on your product, on your marketing, your competition, whatsoever. A PPM at the end of the day. That needs to be approved by the SEC. Fortunately, not in every state where you sell coins in the US, but it will be done, it needs to be approved by the SEC, and they will be treating it as an IPO. So keep that in mind. I find it rather difficult to get that hurdle be done, particularly on early stage utility tokens. Therefore, Regulation D. Regulation D is for me at the moment, if you're considering doing something in the US, is for me the key exemption you should go for and shoot for. It's tailored to ICO. Why? It's only for registered or accredited investors. You have no limitation in comparison to Regulation A+, which is 20 to 50 million. No regulation in terms of how much money you can raise. You can market the shit out of it, which is good news. You have a lockup of 12 months. This is probably the only caveat. So that's, for me, at the moment, probably the most intelligent way, if you really look at it, regulated ICO in the US. Some of them have asked me, not over here, but on different conferences where I'm speaking, how about the crowdfinancing regulation exemption in the US? Well, you know, it's kind of old-style crowdfinancing because it's limited to $1 million fundraising, so it doesn't really make sense. You have to have accredited and non-accredited investors. You have a lot of little expensive means of regulatory purposes which they have installed in there, which you don't like. So you know, unless you want to do something very small, very tiny, very unimportant, and then the question comes up, why do I actually do it? Why do I ICO it for $1 million? So I don't quite get that regulation. Regulation as it's about foreigners, and I don't want to go into this for the moment. So finishing up, as I said, what are our answers to making this market more transparent and more institutional? For one, we have focused on 2.5 markets in terms of ICO advice and ICO investment. One market is Singapore, which covers Southeast Asia, and hopefully in the future with the big Chinese market, which is still blocked for that. Second one will be the US, where we have an own broker-dealer license in place and been doing the business for quite some time. And we're looking tentatively at Switzerland, out of Europe. What we do, the first thing is next month, you can actually go onto our website, you can get an API to our 8 cryptocurrency indices. We make the first 100 cryptocurrency more transparent. It's a global indices program which we give for free to any private individual media house, but people who will be trading on it have to pay a license. It's been run by my colleague Rafael Dana, who heads our Singapore office. Second, and why Singapore, by the way? Sorry for putting this back. Look at the 3 markets who are doing the largest or the most volume of IPOs. It's the United States still. That's why you have to look at that regulation. Secondly, Switzerland, great market, as I said before, and Singapore. So you really have to stay in those markets which are relevant for you, and that means also where the relevant cash is coming from. The US team is run by Gianni Soletti and Vitali Golomb. Some of them may know him as the head of, ex-head of HP Corporate Venture Capital. We're doing regulated ICOs over there, US-based most of the time for the moment. We have the experience of doing the exemptions, both for, not for the crowdfinancing, but for the D and A+. And last but not least, as of May, we're investing a small $25 million IG blockchain fund out of San Francisco, run by Vitali. Why? Because we believe that we have to support the seed and the pre-ICO network with our own capital. Why is that the case? We see such different qualities of management teams' products, and what we want to focus on is seed pre-ICO, both token and equity, which are generally disrupting centralized business models. So that's at least our answer to this very young, new market. If you have any questions, please let me know. Thank you very much for listening. My name is Stefan Heilmann.
Thank you, Stefan. Thanks for coming here.
Pleasure.